Hello and welcome to this video where we're going to redefine money and demystify it, and in so doing we shall free our mind. We shall also become aware of the upcoming transfer, the greatest transfer of wealth in the history of mankind, at least in our recent history. Anything that you can find in the history books, nothing is as big as what's about to occur. We're also going to become aware of the new monetary revolution that's also about to occur. In fact, it has already started all over the world. It's just in its very early infantile stages, but we're going to go deeper into that monetary revolution. And finally, we're also going to discover or become aware of the greatest opportunity for abundance and freedom in living memory, for our generation, our current generation, and for the next maybe, I don't know, 3, 4, 5 generations to come. The greatest opportunity for freedom and abundance. It's already started. So let's get right into it. Now, the word and the concept of money is and has been shrouded in mystery for a very long time. It's been shrouded in mystery, power and control issues, elusiveness, like that whole idea of struggling to try and get some. It's been shrouded in symbolism, elitism, confusion, and even a sense of worship. Yet this need not be. Because once we manage to break down money into its true constituents, when we go behind the scenes, when we peep behind the curtain, we can learn how to literally make our own money. And I'm using that word very deliberately. Make our own money. I didn't say go earn. I said literally make. Manufacturing it out of thin air like the banks do. So there are all sorts of opportunities that are coming up nowadays. And anyways, by going behind the scenes, breaking down money into its true constituent parts, we can begin to be free from, that sense of enslavement that so many people in the world feel about money. They feel like they're enslaved by it, like they're in this rat race that they can't seem to quit or get ahead. So the possibility to master money is very real, very present. It will actually happen for you in this video. And the way to do that, to achieve that mastery, is to literally break it down. Okay? So when you break it down, you'll free your mind. Once you free your mind, the rest will follow. So let me break it down for you. Now, to start off, liberate yourself by thinking of money from a purely functional point of view rather than a religious point of view. And by the way, when I say the religion of money, I think you know what I mean. There's this sense, it's felt by so many people in the world that money has this mysterious kind of powerful thing. They feel like less than the money, like they have to really struggle to earn it, and they don't know how to make it. They don't really know where to start. They've tried everything and nothing seems to work, and then there's this, it's almost like a sense of worship of money. Some people even kill for it. That's what I mean when I say religious point of view of money. Okay? Because a religion is just any sort of cult shrouded mysterious thing that people follow. So it doesn't have to be like an official religion like Christianity or Islam or whatever. Even money can be a religion. Science can be a religion. That idea that everything must fit this box, and I don't know what this box is, but everything must fit into it. That's a religion. Anyway, so instead of thinking of money, I would like us to start thinking of MOEUOASOV. Let's see what that means. MOE simply means medium of exchange. Okay. Now, the medium of exchange, to understand this is actually the simplest part of this video, so I thought we'll start here. To understand this, one needs to understand something called the coincidence of wants, or rather the problem of the coincidence of wants. The coincidence of wants is the situation where the supplier of a good or service, service A, wants a good or service B, and the supplier of a good or service B wants good or service A at the same time in the same quantity. If this happens, it's called the coincidence of wants. In other words, if I want what you have and you want what I have, and that could be goods, services, knowledge, information, whatever, and we both want it at the same time, in the same quantity, in the same location, then we have achieved a coincidence of wants. Unfortunately, that rarely happens, okay? And usually that's because of timing and quantity constraints, okay? Like, you may want what I have, but not now, maybe in 2 years. Or I may want what you have, but I want double what you have, or I want half of what you have. So, you know, that kind of thing makes it difficult to just barter trade and that's why barter trade kind of isn't, really cool. It's not that it's bad, it's just that it suffers from the problem of the coincidence of wants. Okay. And therefore, for exchange to work, we need a medium of exchange. Okay. Literally, a medium of exchange is an intermediary instrument, something in between, something we don't really want, but helps us exchange what we do really want, or rather, we do really desire. So I might desire what you have, and you might desire what I have, but then we go through a middle thing, maybe a piece of paper with numbers. So it's not really what we wanted, but it helps us get what we really wanted. You see what I mean? Yeah, so it is an intermediary used to facilitate a trade and to avoid the inconveniences of the lack of a coincidence of wants. Now, here's a problem. We are accustomed to having bank currencies as the only medium of exchange that we use. But in reality, there are many, many, many other instruments that can be used as MOEs. And we'll get to that much later in this video. I just want to set the stage up for now. Now, the second functional aspect of what we have come to call money in popular language is what we call a unit of account, UOA. A UOA is anything, again, that word, anything that allows us to do three things. To value transactions, which means to allows us to compare different goods and services using one common standard of value. So this way you can even compare, let's say, like a cow to a mobile phone to a table or a desk or a computer or a vacation in terms of dollars. You see? So that kind of that it's a very tiny thing, but it's important for commerce. Again, anything that allows us to also keep accounts, in others to keep debit and debit and credit records, which is usually called a ledger. Anything that allows us to keep a ledger of transactions, or debit and credits, that's also a unit of account. And anything that allows us to make calculations either on the ledger or the value of the goods and services themselves, again, that's a unit of account. Anything that can do that. The third function of what we have come to call money is something called store of value. A store of value is anything that can be saved, retrieved, and exchanged at a later time. Anything. So to qualify as an SOV, it has to be predictably useful when retrieved. Okay? It has to retain that purchasing power so that it doesn't lose value, or maybe doesn't lose all that much value. So that okay, if I put this in storage for 5 years and I come back and get it after 5 years, I can still use it. It will still have retained most, if not all, its value. If it's a very good SOV, it will actually have appreciated. If it's a poor SOV, it will have depreciated. But nevertheless, it stores value. Okay? So things that lose value include the way think about think about things that don't qualify as a storage of value. Those are things that either lose value by extinction. For example, if you have a loaf of bread, it's very good. You can eat the loaf of bread, but it's gonna rot after a week or after a few days. So that's not a good way to store value. But gold doesn't rot. Okay. Things that get burnt, water damage, or things that people lose confidence in, or things that can be overprinted, forged, and sometimes that includes official currencies, because we all know they get overprinted every now and then, and that's what breaks them. So the best example of an SOV is gold. Now, other examples include real estate or property, houses and land, currencies, silver, gold, of course we say that, art, and other things, to one extent or the other. Some are not as good as the others, But that's what an SOV is. Now, here's a point. If you can establish the attributes of MOE, UOA, and SOV on any instrument, you're home free. Simply break down the word money into its constituents, MOE, UOA, and SOV, and that begins to free your mind from old limiting conditioning around abundance. What does that mean? People think abundance equals having an accumulation of US dollars. Can it be? Yes, that could include abundance, but abundance is so much more than that, you see? And then, secondly, you don't have to get your MOE, UOAs, and SOVs from any one particular instrument. You're not stuck to having to earn currency. You don't have to earn Kenya shillings or euros or dollars. I mean, if you can, that's great. But you can do that and other things, or you can do other things and then exchange those other things for dollars if and when you need them. You see? So I'm just expanding your mind around this because we want to get to the point of the greatest opportunities and the revolution that is coming up. You first need to understand these foundations. So, anyways, there is more to this. Now let's keep going. We're still building up to the foundations, and then we'll get to the point very soon. Now, let us talk about the difference between abundance, wealth, money, and currency. See, people confuse this all the time, and that's another part of the problem. These are separate things which sometimes can overlap, but they don't have to. Okay? Now, let's start with money versus currency. Again, they're not the same thing. A dollar bill is not money, it's currency. A euro bill, a Kenya shilling, Japanese yen, that's not money, that's currency. Okay, big difference. Now, money and currency are both mediums of exchange, they are both units of account, and to a slight extent, they store some value, but not exactly. Let's go through everything. Now, if you look at the left column, you've got the words portable, which means easy to carry, durable, which means last long, divisible, which means you can change $100 bill into dollars, $1 or $5 notes or whatever. And fungible, which means interchangeable, which means $1 in my pocket is the same as $1 in your pocket. It doesn't matter which dollar a shopkeeper gets, they're all the same. That means fungible. So these four words are the components of MOE and UOA, medium of exchange and unit of account. These are the components of MOE and unit of account. Now, if you look at the money column and the currency column, you can see that both of them have all of those four components as yes. Now, let's look at the next two rows on the left column. The first row says printed, minted indefinitely. The second one says store of value. Now, these two are what you call the components of the SOV. We've talked about SOV. Now, if you've got something that can be minted indefinitely, does it store value? Not really. You need something that cannot be indefinitely made. Like, for example, think about it. Gold. You cannot mint. You can't, I don't know of any factory here on this planet that makes gold. I know of factories that refine gold. I know of gold mines that dig and try to find gold, but you cannot just make more gold. You either have to find it or you don't find it. So in that sense, there's a sense of limitation on the gold. But when you think of currencies, every time they feel like printing some more, in fact, they don't even print them. They just put them in the computer, add extra zeros. Press of a button. Every single day there's new currency on this planet. Like, we're talking about hundreds of millions of dollars new that didn't exist yesterday. Every day there's new. You see, every time somebody takes out a bank loan or borrows some money, or the Fed Reserve or some government, every government everywhere in the planet needs a little bit of extra money for their budget, whatever, they just make new stuff up. You see? So this destroys the ability of currency to store value because, just think about it. If there's too much of something, everybody has that, and it doesn't store value. I think you understand that. So that's the difference between money and currency. one has a limit supply, and not just an artificial limit that people say this is not going to be printed anymore, but literally, even if it's artificial, nobody can break that limit. So gold is great because nobody can really manufacture gold. Like, you can't forge gold. You can fool people with fake gold, but you can't forge it. You can't make new gold, but you can make currency in your bedroom if you're really good at it or whatever. you know, or even banks themselves, they make it out of thin air every day. So that's the difference. Now let's look at wealth. Wealth is literally your time, your health, and your freedom. Okay, that's wealth. That is actually what wealth is. It's nothing to do with money and currency. Wealth is your freedom, which of course implies you're able to do stuff with that freedom. Okay, so there's no point being free, but I'm able to do anything with that freedom. Your health, obviously, and your time. That's wealth. Then if you look at abundance, that's even a bigger concept than wealth. Abundance is life itself. Everything. Just look at the universe. There's so much going on. You look at in the oceans, in the trees, on land, underground, in the skies, in the stars, in the galaxies, in the universe. It's an infinity. Okay? And I'm gonna use the word infinite love and light, because one is like the spiritual word for it, the other one is like the scientific word for it. And by light, I literally mean the quantum energy material that forms all of existence. It's an infinite amount of energy. I mean, scientists now know that, there was an old idea that, energy is a fixed quantity in the universe, but now we actually know it's not a fixed quantity. I mean, it's crazy how much energy there is in this universe. It's ridiculous. Okay, now you may not know how to harness it, but that doesn't mean it's not there. Okay, but abundance is that infinity of life itself, and the fact that we are able to even use it. Now, abundance is also the freedom to do what you desire when you desire. Again, these words have nothing to do with money and currency, although they may include that. Okay, so money and currency is not a requirement for abundance, but it may include it. Okay. So abundance, wealth, money, and currency are very different things. So let's stop mixing them up. So the current monetary, industrial, and banking system works by tricking us into believing that they are one and the same thing. Okay. So once you start seeing through the lie, you start to become free. You start to realize that um, you know, the industrial idea that you have to struggle hard to get some money, and the more you get, that's abundance. Money comes from only banks, and that's it, and nobody else. All those little things are just kind of like part of the trickery, right? Does the system work? Yeah. Can you get good at playing the game in the system? Yeah. But I'm about to suggest something even easier. Okay. So I'm not saying like, forget everything about the old system, but I'm saying, look, there's no need to kiss its ass. There's no need to worship it and to be enslaved by it. There are better alternatives. Cool. Now, again, we're still dealing with the foundations to improve our understanding before we can actually start talking about solutions and XYZ. Now, let's look at another concept here. This is the fundamental structure of all monetary systems, at least the monetary systems that we have as a civilization had the experience of since the beginning of time. Okay, and also the general theory of monetary systems, because people think that our current monetary system is a result of evolution, and that's just the way things are, and we're just doing the best we can. They don't understand that monetary systems they're like a design, like the same way you can say, okay, we're gonna have a car, we're gonna have an airplane, we're gonna have a train, we're gonna have a ship. Each one of those are different systems for different purposes. Even monetary systems are very deliberately designed. They did not just come by by accident or evolution. Okay, so let's look at them, because this will really give us a lot of freedom once we understand this. Now, let's first understand the two things that must be in existence whenever you create a monetary system or a currency system. If you say, for example, we're going to create a new currency, okay, or new monetary system, you have to decide, what does this currency or this monetary system represent? Because you can't avoid the fact that it has to represent a someone and a something, like, just to sort of summarize it, a someone, to rephrase it, you can say, who owns that system? Is it owned by the people, whatever? But we'll get into that in a second. A something means, what is this monetary system based on? Yeah? What is it based on? Okay? Is it based on gold? Is it based on silver? Just paper? Is it on debt? Is it on whatever? So those two questions must be answered. And these are the fundamentals of the system. And depending on what you choose, you end up with a very different society. So cool. Let's first look at the someone. The someone that owns the system can either be the public, in other words, the collective population. And by that, I'm not talking of the government. I'm not talking of a small bunch of elected officials, and also maybe like, what you call the deep state, the real controllers of any particular nation, the people who are always there, who finance the elections, who nominate the parties and everything, and the candidates, and that's called the deep state, the non-elected, behind the scenes government, the shadow government. I'm not talking about those guys, and I'm also not talking about the official government. When I say the public, I literally mean all the people of a country or a nation or the planet. Okay, that's what I mean, the collective population. Okay, so let's not confuse the government with the public. Again, separate things. So the someone can either be the public, or it could be private entities such as banks or kings. Before, it used to be kings. Nowadays, it's banks. Or it could be decentralized and autonomous, which means nobody really owns it. It's like asking who owns the internet. Nobody owns the internet. It's a network. It's a decentralized network. Yeah. So in the same way, who owns love? Who owns? You know what I mean? There are so many things. Who owns the ocean? Although that's a natural thing. Okay, let's just keep it easy. Who owns the internet? You can't say this person owns the internet. There are many little networks that interconnect, and that's a decentralized and autonomous facility. Okay. Now, the something. The somethings can be either debt-based. By the way, before we go to the something, no, actually, I'll get back to that in a sec. The something can either be debt-based, which means literally the currency is founded on debt. Okay, this is actually what we're running on right now. Our current planet, like maybe 97% of all countries, are literally running, and I'll prove it to you in a second, monetary systems that are privately owned by banks. And I'll show you exactly why. That's not a conspiracy theory. I'll show you precise evidence. And they're running debt-based. They're creating debt-based money. In other words, a country has a government. That government issues treasury bills or treasury bonds. Those are, in quotes, sold to the private banks. And in a long story, which, literally you need to see the visual of it, that is what then becomes the initial money of a country. And then the government prints, paper and coin for about 4% of the total monetary money in the country. 4% of it is, minted in paper and coins. The other 96% is literally produced out of thin air as records by the private banks. So it is the 4%, the physical, that gives the confidence that the rest, the digital or the non-physical, the paper record, just the record ones, is also real. So it's a confidence trick above anything else. And the government also guarantees this trust in the money. But at the end of the day, it is debt-based. Now, in the old days, before the 1970s, currency was actually asset-based, which means it was backed by gold. You could take a piece of whatever currency that was, maybe it was a dollar or the British pound or whatever, walk into a bank, put it on the desk, and they'll give you an equivalent sum of gold to put in your pocket physically, and you go away. But you cannot do that now, okay? So now today, money is called fiat currency. Before, it used to be called reserve currency because it had a gold reserve backing it, and then it became fractional reserve, which means it was no longer fully backed by gold, it was only partially backed by gold, and then it became fiat, which means there's no more backing. So it came from being an asset-based economy, the whole world, to a debt-based one. The third option is a productivity-based currency, which means proof of work. That means that you produce something, you get a receipt. That receipt is a means of exchange, or something like that. I'm just summarizing things because we have to move quickly. Now, the best someone to have for a currency is the public, or rather the collective population, or a decentralized and autonomous system whereby no one really owns it, so no one can really control it. And this creates equal opportunity, equal access, and transparency. The worst someone to have is private entities, which means banks or kings. They control and own the system that everybody else must use. Now, the problem with this is that it creates an elite versus non-elite society. The haves and the have-nots, and that gap keeps getting bigger and bigger. It also creates secrecy and Kabbalistic control. Cabal, again, is just a normal English word that means a secret political clique or faction. Otherwise known as a deep state, a state within a state, or the shadow government. Everybody knows that there's such things in just about every country. There are people who pull the strings. So that kind of a system where private entities control the issuance of currency creates that kind of a outcome. Now, the best something is asset-based or productivity-based currencies. And the reason why is that this creates a store of value. Remember, we talked about money and the and let's say gold being able to store value because it cannot just be infinitely printed, and so on. So if you want to create if you're building SOV into a currency, you have to make it asset-based or productivity-based. The worst something to have is a debt-based system because that loses value all the time. And you'll see why in a second. We'll get into it in a second. It loses value all the time. And it does so, and as it loses value through, increasing debt and so on, it's actually transferring that lost value into the system owner's hands. The loss of value, let's say like $100 you have today, or 100 euro or whatever currency, Kenya shilling, is not the same as it used to be 10 years ago. It doesn't buy the same stuff. Everybody knows that, right? This value did not just vanish into thin air. It went somewhere. You know where it went? It goes to the system owners. That's why the gap grows, the rich and the poor, the haves and the have-nots, the elites versus the non-elites. This inflation, this loss of purchasing power transfers from the masses to the system owners. That is what it was designed for, you see. So today, we're actually running most of the planet on privately issued debt-based currencies. Now, we are going to look at some examples that prove that most countries are like this. And by the way, again, for the sake of brevity, I'm going to be very short. But the point of this slide here is to very quickly show you how the system works to create currency. Now, the part that I really want you to focus on is the one that is encircled in a light green kind of squiggle. That one shows you that the bulk of the currency is actually created by the private banking system. The government only mints a tiny fraction of it. Okay, so this is literally how the multiplier works. It works when banks give out loans. When they create a loan, let's put it like this: if let's say like I put money in a bank account, let's say I put in $100. And somebody else goes and gets a loan for $100. Does my When I go to my online bank, do I notice like my account has gone down by $100 because somebody else borrowed my $100? No, it never moves. Why? Because that loan that the person took literally came out of thin air. Do you understand? So this is what does the multiplier trick. And now most currencies in the world are actually privately created. For example, this in on the left you see South Africa. The banks printed 22 times more than was actually minted by the government. And in the United States, you can see over here, 85% of it is again private money. Some people even say it's more than that, 95%, but you know, who's counting? Then here you got, and again, remember, this happens because of the debt trick. You understand? That's what the debt part is for. That's why we're saying the currencies are based on debt. Now, look, these two graphs show the amount of debt there is versus the amount of currency. Both government issued, which is, it's so small you can't see it. It's the little orange line. And then the bank issued is a big green line. And then the debt to create that system is the red line. Here we're looking at Canada and the United Kingdom. Okay. And wherever you look, all over the world is the same story, okay? It's the same story in almost every country, 90-something% of the countries in the world. And hence the term banking system, because although we are talking of different currencies around, countries around the world, they are all interconnected by one system, okay? So again, that shows you the big difference between bank created money and government issued notes and coins, okay? And these are just private bankers, just human beings like you and I. But they have the monopoly to issue debt-based currencies to the rest of the population and to demand that everybody use that and only that exclusively. Okay? Talking of the system, these are the top banking brands of the world. Okay? As you can see, there's a whole bunch of interconnectivity. Now, some people say, the government, the politicians, my senator, my MP is going to fix this. Look, according to this survey, which is a poll of 100 ministers, members of parliament and in the UK, 7 out of 10 MPs think that all the money in the UK comes from the government. You see? So they actually don't know how it works. Only 1 in 10 knew the reality. And this 1 in 10 really don't have the power to change anything, you know? And most of them are sponsored by the same system. And that's so funny because the very Bank of England, when you look at their official documents, it says that just as taking out a new loan creates money, the repayment of bank loans destroys money. Banks making loans and consumers repaying them are the most significant ways in which bank deposits are created and destroyed in the modern economy. So the Bank of England is not even hiding it. It's saying it clear as day. Currency is created out of thin air. But even the politicians don't know that, you know. Cool. So this has actually been nicknamed the Babylonian money magic slave system. Yeah, I know some people don't like to hear that word Babylonian. Ooh. But it doesn't matter what the nickname is, you know. Here's the point. Is to understand what it does, okay? I'll read what's on the screen. Because almost all our currency is on loan from banks, someone has to pay interest on nearly every unit of currency. Do you understand that? It's not just people who take loans from the banks, but everybody is somehow paying interest on that currency. The whole system is designed on debt. Even if you get paid by somebody who comes to your shop and pays you money for, let's say you're selling candy, that note that you took from this person came originally down the chain link from debt. The whole system is built on debt. Okay, so this interest redistributes money from the bottom 99% of the population to the top 1%. That's how this the system owners, the elites, the haves, get more. It's not really that they're so amazingly good at working hard and they're so ultra productive and that's how they're getting more. It is that the system is built to redistribute. Okay, that's the point. Okay. Meanwhile, inflation and financial instability all lead to a growing gap between the elite and the non-elite. In summary, the trick works like this. Private bankers give you worthless debt-based paper. They give you this currency in exchange for your real wealth, which, as we saw earlier, is your time, your freedom, and of course, your hard assets. I mean, think about it. If you get a mortgage to buy a house, that's a hard asset. If you fail to make a payment, in exchange for the mortgage was just some numbers that were put in your bank account, like digitally. They were not real hard assets, they're just digital records. But if you fail to return those digital records, pay back your loan, then your hard asset, your house, is taken. You see? And meanwhile, you're exchanging your true wealth, your time and freedom for digital payments. I mean, to return the digital payment. You understand that system, right? And this is set up legally and structurally so that it is the, in quotes, only way to live. And there's all sorts of mumbo jumbo going on, so that, like, you don't even notice it, Cool. Now, let's watch a very short clip that's going to nail this point home nicely.
Now, one of the reasons why we find it difficult to understand the banking system and credit creation is that we leave school without any money and we go and get a job working as an apprentice to a plumber. We work really hard all month, and at the end of the month, somebody puts money in our bank. And so for us, the logic is you work and then you get money, you get savings. In reality, you would never have got that job if credit hadn't been created in the first instance. It's a really important conceptual misunderstanding, and it isn't something that the public just are guilty of. Economists don't understand this stuff.
Money doesn't come out of economic activity. A lot of people I've come across kind of assume that if you've got businesses and you've got people doing things, that somehow money emerges out of the process of people doing things, making things and growing things and selling things and producing things, that somehow money just emerges. It's not. It's like oil in a car. You have to put it in.
Great. So what I'm hoping is that video and what we've talked about so far has started to show you that, yes, we do seem to get money from work, but that's not the only way. That association has only been programmed and conditioned into us. Now, I'm not saying work is not good. Work is great. We need to work. We need to produce as a society, as a planet, and exchange value. That's the only way we evolve. So in terms of like doing stuff, yeah, that's part of the reason why you're here. But the idea that you must work at a job that you're employed at and you don't like it, and the reason why you're doing it is so you can earn a means of exchange, and this is the only way. That's what I'm trying to sort of like uncondition us, unprogram us from. So work is good, yes, but do your own work. Does it have to be connected to money? No. Really? Yes. And that's where we're going to. We're about to talk about the new monetary revolution, whereby mediums of exchange are no longer produced out of debt from privately owned banks or whatever, or individuals or entities. Rather, they come from distributed systems. And that means you can exercise any and all of your talents in any and all sorts of different ways and exchange them for mediums of exchange, various types of mediums of exchange, not just official government currency or whatever it's called, banking currency, but other types of mediums of exchange. And then if you need to, you can exchange those medium of exchanges for, I don't know, dollars if you need to, or euro or whatever. So the world is really going through a very cool revolution, and we'll get to it shortly. Let's just continue with the presentation in sequence. Now, if we really want to go deep into understanding this idea of how did we come to be where we are today, is it really evolution, or was it literally specifically engineered that way for reasons which may not be the most tasteful of reasons you can imagine? You can read certain books, and I've collected a few here for you. All this, by the way, these are screenshots from Amazon.com. Now, this particular book is written by Yanis Varoufakis. I think that's how you pronounce his name. But Yanis Mr. Varoufakis was the former Minister of Finance for Greece. Okay, so we're not talking about a joker here. We're talking about a former an economics professor who was, I believe, he has taught in the US, he has taught in Europe, he taught in Australia, who then became a Greek, the Minister of Finance for Greece. And here he's talking about the very same system that we're talking about, this whole deep state, shadow state, whatever, and its history, not just today but historically, and how the current modern financial system works, why it was set up that way, and so on. Then you've got another book by the same gentleman, and this one is more about the deep establishment. Then you've got this book. It's one of the best-selling books on Amazon in terms of like economics and finance. It's called the Creature from Jekyll Island, and it's a look into the Federal Reserve, and looks at where does money really come from, where does it go, who makes it, and so on. Okay, so it's really, really amazing. You can read that. And another one is this one called the Confessions of an Economic Hitman. Now, John Perkins, was literally one of the people who went around the planet, amongst many other people, but went around the world switching different countries over to that kind of like Fed Reserve linked, IMF kind of linked system that we're now talking about, the one that is currently giving people so much problems. Then this other one is called Profiting Without Producing, How Finance Exploits Us All. So this one looks more about how financialization has come to create an excess of currencies that are not even, only 2% of which are used for actual trade of goods and services. The others are just, it talks about the crisis of having built such a system. Okay, and then this one is called The Political Economy of Money and Finance. So those books are really cool. Now, I'd like you to watch this other short clip as well. It's quite interesting. You'll nail a different point home. Let us now zoom into the infographic that you see in front of you. If we start right at the top, you'll notice that each of these squares represents roughly $100 billion when they're in full size. So at the very top, you've got the value of Bitcoin at the time this graphic was made, which was in 2013. And the value then of Bitcoin in 2013 was $5 billion. And then the next little dot up here represents the value of silver. Again, everything is in 2013. That was $14 billion. All the silver in the world. Okay, everything that has ever been mined, all the silver. Then the top three squares up there represent three of the world's richest people, including Bill Gates. And the three of them in total, $80 billion. If we scroll further down, we've got the world's biggest companies, including Apple, some of the biggest ones, some of the top 5. And in total, these top 5, at least here on this infographic, they represented $616 billion. That's the Federal Reserve balance sheet. And now we go to coins and banknotes. All the coins and the banknotes on the planet, in the world, total of $5 trillion. If we scroll further down, this is the value of all commercial real estate in the world, $7.6 trillion. We scroll further down, this is the value of all the gold in the world that has ever been mined, $7.8 trillion. Narrow money, this is the kind of money that is easily accessible, including money that is in your savings and your checking account. You don't need to make an application and wait for 7 days to get access to it. That's what they mean by narrow money. And now you can see the sum total of the squares are getting bigger. This is the value of all the stock markets in the world, roughly $70 trillion. Okay? So as you can see already, if you're to sell all the shares in the world, there's not enough cash to actually convert those shares into cash. You see, we're already crossing into some very interesting territory. Now, this bigger set of boxes is what we call broad money. $80 trillion back in 2013. This is all the narrow money we've already talked about, plus the money that is not so easily accessible. For example, time deposit, fixed deposits, money market accounts, things that you have to, let's say, make an application and wait for 30 days or whatever to get access to it, even if it's, in quotes, your money. Then now we get into very interesting territory. This represents all the debt in the world, the total amount of debt on the planet. Almost about $200 trillion back in 2013. Obviously, now it's much bigger, but just see how much bigger that is than anything that we have seen. If all this debt were called, like, they said, okay, now everybody pay up their debt, there's not enough money, whether it's broad, narrow, or cash, to pay it. Now we get into the really funny money. This is where banking really makes its money without producing anything. In debt, they already make money without producing anything, the financial industry. But with derivatives, that is even bigger, because the total value of derivatives, nobody really knows what it is. Some say it's as low as $630 trillion, and some say it's as high as, we actually now in the quadrillion, $1.2 quadrillion. Nobody knows. But that's the size of derivatives. Financial instruments that are actually usable as money, but they actually produce nothing. And this is what creates the bubbles and the crashes and everything that we've been seeing. Are you noticing that I'm still scrolling and we have not done with derivatives? I'm going to scroll back up. This is the end of the infographic. We're going back up. We're looking at derivatives. I'm still scrolling up, scrolling up, scrolling up, scrolling up. This is all derivatives. Scrolling up, scrolling up, scrolling up, scrolling up, scrolling up. We're still in derivatives. We're done with derivatives. Now we're getting into debt. Then broad money, all stock markets, narrow money, gold, commercial real estate, coins and banknotes, Fed balance sheet, some of the biggest companies in the world, richest people, silver, Bitcoin, 2013. So you can now see a clearer picture of what we're dealing with when we talk about money. There's no such thing as money as a singularity. It's a collection of so many crazy ideas. Now, a quick hint before we move forward. This clip also shows us how much wealth could be transferred into cryptocurrencies, which is what we're about to talk about next, once the old systems really start to crumble. Because we can all see that the current monetary systems around the world are already shaky. They've been sort of disintegrating for a while now. 2008 was one of the biggest shocks, the global financial crisis. But generally, it's at a point where even presidents such as people like President Obama, Chinese Premier Putin, and many others all over the world, in Europe, in Africa, whatever, they're starting to really realize that, look, this system is not going to be around forever. Of course, nothing lasts forever, but the people are starting to see that it's at a point where it's starting to crack. So now, as it crumbles with all those derivatives and debts and all that funny money and everything that we saw in that video, a lot of this will transfer away from these old currencies as people lose confidence in them, and they'll go into things like precious metals such as gold, silver, and of course into cryptocurrencies. And you'll see why in just a second, but I just wanted to give you a hint that starts to give you the volume that is possible, obviously not 100% of it, to shift into things like cryptocurrencies and precious metals when confidence is starts to be lost faster and faster. Okay, now, but before we get into cryptocurrencies, let's talk about false scarcity and the no jobs, in quotes, myth, the myth of there being no jobs. Now, a lot of people don't know this, but only 2% of the world's currency is actually used for exchange of goods. If you look at all the money that trades hands in any given day on this planet, 2% of it trades hands for goods and services. The rest is actually, speculative stuff like, forex trading. And I'm not talking about the individual forex trader. I'm talking about interbank forex trading, debt, derivatives, swaps, and so many other things. There's so much out there. So, again, that's that idea of profit without producing, and the whole idea of the expansion of money supply through these kind of activities. It's literally out of thin air. So once we understand that, we can start to understand that there is no scarcity of currency. Only 2% of it is being used anyways for to pay people salaries or for goods and services. The rest is it's not really even in a it's not actually being used for whether it's jobs or whatever. So when we talk of scarcity, we can say that the scarcity is often falsely created when there is a systematic or a deliberate restriction from access to a means of exchange, despite the fact that people who are looking for that means of exchange have talents, they have internal value, they're able to do so many things. We are all able to do so many things. We can, I can do so many things. I mean, physically, mentally, with my hands, with the computer, with people, with the ground. There's so many talents that I've got the same as you. You can do so many things, right? So you got so many talents, you got so much internal value. And then when you look around the world, there's so much to do. Forget about official jobs that are listed on job boards. I'm talking about things to do. Like um, I don't even know how to start to say how many things are there to fix on this planet. How many innovations can we have? How many poor people can we help? How many things need to be done or fixed or built or there's so much to do. There's so much. Think of all the so-called problems in the world. Those are all opportunities to be solved. There's so much to do. So the idea that there's no jobs, again, and I'll show you why, it's a myth. And then there's also an abundance of currency, just like we said. Most of it is not actually used for trade, 98% of it. And then there are also real assets, real resources. The earth is full of resources. I'm not saying we irresponsibly go do mining and cutting of trees. I'm just saying there's a lot of resources on this planet, a lot of energy, a lot of, So despite the presence of people who are able to do things and things being there to be done and their resources and currency, then you still have this so-called scarcity. You see? So let's get very specific to examine that idea. The Great Depression ran from 1929 to 1939. That is 10 years, okay? People suffered like you can't imagine. And it started rather, when 9,000 banks failed, during right after the stock market crash of 1929. How did they fail? Well, people literally went to the bank and, because people were scared, they thought, you know what, I'm going to go to the bank and just, get my money in cash. And so everybody did a bank run only to realize that money doesn't exist as cash. You know what I mean? That's why today, nowadays, you see the Fed Reserve, or even in Kenya, when banks collapse or they look like they're about to collapse, the government jumps in, shuts down the bank to prevent people doing a bank run, and then, in quotes, rescues the bank. It has to do it. It's not because if it doesn't do it, the whole system crashes and the whole myth crashes. People, the trick of confidence is lost. So they have to do it to maintain the trick of confidence, you see? So, and that's what almost happened in 2008. That's why, governments everywhere went and rescued the banks. Because if they don't do it, you get 1929, the Great Depression. Because really the whole thing is smoke and mirrors. Okay? So anyways, for 10 years, from 1929 to 39, people starved. And listen to this very carefully. This was despite the fact that people to work didn't disappear. The country still had people, and these people wanted to work, and they were still able and willing to work. They wanted to work. They didn't go anywhere. The things to do didn't disappear. The things that they were doing in 1927 were still around in 1929 and 30 and 31. The things to do didn't disappear. The resources and the assets didn't disappear. The factories didn't disappear. Yes, they closed their doors, but they didn't disappear. You understand what I'm saying? They were still there. As in, literally, people could, if they just decided, fuck it, we're all just going to go to work, open the factory, let's just start doing things, they could. But the problem is, the monetary system itself collapsed. It's only the monetary system that collapsed. Nothing else collapsed. But psychologically, this meant that, in quotes, there are no jobs, which means there are not enough ways or official currency, whatever, to exchange, means of exchange, to officially pay people so that they can do the job. So you can say there was not enough permission slips to issue for people to confidently exchange their time for whatever to work. You understand what I mean? I know I'm oversimplifying a very complicated thing, but these are very short. We're trying to do this in one slide, okay? So please, if you're an economist out there and you've got a whole list of 10 other reasons why this happened, I get that, but we're simplifying something that's quite deep. But the point is, despite the presence of resources, people, and things to do, the means of exchange is what halted everything. And why? Because of the particular kind of system that was in place. Okay, this doesn't happen with every type of monetary system, only with certain kinds. Now, another good example is Africa. Africa, for those of you who don't know, actually has 23% of all the world's resources. People think Africa is poor. It's not poor. They've got 23% of the world's resources. Yet, it experiences poverty like no other continent you can imagine. Now, I'm not blaming all this on a monetary system. There's a lot of other things going on there, including, corruption, like in much of the world, but there's a particular kind over there, and also, lack of unity. But generally, the monetary system is very interestingly at play here, and I'll explain it to you just now. Africa has no equitable access to the international banking system. It is loaded with IMF imposed, in quote, structural adjustment program debts. This was actually something that was called the SAP whatever program or whatever. And Africa has to use foreign currency at externally dictated rates to do business. Okay, I'll give you a very quick example. So most of us know what the petrodollar system is. This is the international legal requirement that for any country to trade oil is traded in dollars, US dollars. Like, you can't trade dollars in other currencies, not really, not in the international market. Sort of by international law and agreement, it has to be in US dollars. So now look at this. Africa is legally required to buy its oil with US dollars, which it must work to earn by exchanging real assets or real labor or whatever. So it literally has to give somebody something real to get a digital currency. Now, when you look at the flip side, the United States also imports oil, right? But it does it by creating dollars out of thin air. It's the only country in the world that can do that. So compare those two access to banking, if you could say that. And these are just an extreme example. This access to banking goes down deep in so many levels that you cannot even imagine. But the point is, if I get all my oil literally for free by creating computer records myself, and you have to literally work like crazy and exchange your labor and your land and your resources for what I make for free, so that you can also get your energy, your oil, you'll never beat me. It's like it's a game that you cannot win. So although we're using Africa as an example, it's the same thing that happens even in the West within the elite system owners versus the non-system owners. Africa is just an extreme example, but it happens even all over the world. That's just how it works. It's part of the system. So the point is, if businesses and people can only get access to debt-based means of exchange, currency, and they can only get it from centralized banking systems, privately owned ones, okay, that then chokes them. It chokes the masses. It confines their capabilities and their freedom, okay? Think about that. So denial of access to official means of exchange, despite availability of real assets, internal value of people, and things to do, that points to one or a combination of three things. Either the system is flawed, or the system is built to deliberately effect control and governance over populations and over real assets, and it is a way that deliberately or not deliberately creates false scarcity and the control of resources. Okay, so this happens mostly with centralized, privately owned monetary systems, especially when they are based on debt, fiat currency. Now, I want to imagine something else different. Imagine that people and businesses could get other kinds of means of exchanges that are not based on debt and they come from decentralized autonomous sources. Okay, so they're beyond the politics of economics. Currencies such as Bitcoin and other cryptocurrencies. Okay, imagine if that could happen. Imagine if there are so many different, we'll call them tokens, okay, or cryptocurrencies, whatever word you want to use, so many different kinds, and you could earn them in so many different ways, and they don't have to come from a central system. So you literally don't have to get an official job to get them. You can get them just doing what you love. I don't know, whatever that could be. It could be just doing gardening at your home, in your backyard, and then you've got these very nice things that you've grown, and somehow you exchange them for these other crypto tokens that come out of, and I'll show you how that happens, but come out of, somewhere else. And so you can accumulate that little crypto token that is very good within your neighborhood. And when you want to do something that actually requires dollars, you could exchange those tokens for dollars or whatever, or you could just exchange those tokens for that other thing. So once you start getting off the debt system and you decentralize, you distribute, you get off the whole centrally, privately issued currencies, then interesting things start to happen. And that's already starting to happen. That we already have several years of proof that this works in several countries. Okay, so now let's talk about that kind of a new monetary system. And over here, we're going to be talking about the future of money. And we are going to talk about trust-based versus trustless monetary systems. We're going to talk about fiat currencies versus cryptocurrencies. And then we're going to briefly look at the greatest transfer of wealth in history and possibly the greatest opportunity of our generation. Okay. So now here we've got the old column on the left and the new column on the right. That diagram, the old system was centralized. As you can see, you've got a center, and all people, all businesses, all governments, all human beings, all companies, whatever, have to sort of go to the center, to the central bank, which has its ring of private banks around it, to get currency. So there's that idea of a central point of acquiring a means of exchange. Whereas on the right, the means of exchanges are all decentralized, and people can deal directly with each other without having to pass through the center. You see? Now let's read the old versus the new. In the old system, central governments and banks were there to create trust in the system. And this trust was enforced by the concept of legal tender. You've all heard that word, legal tender. Legal tender simply means it's a point in law, and it means coins or banknotes that have been produced that must be accepted if offered in payment. Okay, so if I'm holding a piece of legal tender, maybe it's a euro or a British pound or whatever, Kenya shilling, and I give it to you, you have to accept it, especially if you're within the jurisdiction of whoever enforces that legal tender. You have to accept it. You cannot say, no, I don't want this. I want to be paid in, I don't know, gold or whatever. You could refuse to do the deal, but, if you're going to do the deal, you have to accept legal tender. So these old systems were hierarchical, they were centralized, and they were proprietary. Proprietary meaning they were owned by a particular someone, okay, private someones. They're also debt-based, or they are, although they are sort of on the way out. And because they're debt-based, they're inflationary. And they produce what we call fiat currencies. They used to produce reserve-based currencies, which then became fractional reserve, but now because there's no reserve, there's no asset backing, they're now known as fiat currencies. Under the new system, you've got distributed blockchains that are the ones that are creating the trust. You see, you still need trust, because imagine you and I, if we don't know each other but we want to trade, we need something that will make sure that the thing that we use to exchange, the means of exchange, is trustworthy. So I don't cheat you, you don't cheat me. You see? So before it was banks and central governments and private banks ensuring this trust. Now you've got something called the blockchain. It's a distributed ledger. And that's what creates unbreakable trust, even higher levels of trust than central banks and governments and banks can have made. It's a higher level of trust. And then on top of that, it's called peer-to-peer trust. So you and I can trust each other directly without going through a central authority. Okay? Yeah. And whether we like it or not, the trust will remain. Okay? So it's unbreakable. And that's why it's called trustless. It's called trustless, but that's where the old one is called trust based, and this one is called trustless, meaning we don't need somebody in the middle to trust. Anyway, so the trust is enforced by the blockchain. Uh, the hierarchy is not the structure is flat. It's not hierarchical. It is also decentralized, and it's autonomous. It's distributed. It's not owned by any one private entity. Also, it's not based on debt. The currency is not produced by creating debt, and therefore it's not inflationary. And what it produces are cryptocurrencies. Crypto means they're cryptographically secured, and currencies meaning, just like currency, just like fiat currency, but different. So an example of this is Bitcoin. Now, let's look at the main differences between fiat currencies and cryptocurrencies. The only difference between like on your left, you've got this image of the US dollar note and a monopoly dollar note. The only difference between these two, they're both made of paper, is that you believe one has more value than the other. But the fact is, they're both made of paper. And number two, 96% of all, whether it's Kenya shillings, US dollar, euro, or whatever, they're all digital. They're all records in a computer. Only 4% actually exist physically. So, you know, even in quotes, real money, government money is also digital. It's only a little bit of it that is physical, just to keep that trust, because people want to touch something, you know. So now, when you want to look at the difference between gold, fiat currency, and cryptocurrency, you once again look at the traits of money. We looked at those before: fungible, non-consumable, portability, durability, divisibility, and all that sort of stuff, So we looked at all those. Now, if you look at this table, you'll notice that cryptocurrencies, gold is the worst kind of currency is fiat. That's the worst kind of currency. Gold is the best kind of money because if you're talking about a store of value that is commonly accepted, it's really great. And plus, you can even use it to make jewelry and stuff out of it and other industrial uses. But the problem is, it's kind of heavy, it's kind of bulky. You have to carry it, and then you cannot chip away a little bit of it to buy a pizza, or an ice cream. So that problem is solved by cryptocurrencies. Yeah, not all of them, but some of them. Okay, some of them, like Bitcoin, they have a limited supply, just like gold does. Okay, in fact, it's even better because it's a fixed number. Like, for example, Bitcoin has a fixed number of Bitcoin that can ever and will ever be produced, and that number cannot be changed. Whereas gold, we know it's quite rare, but you never know. Tomorrow, somebody might find a new gold mine somewhere, and that increases it. So it's not as limited as certain kinds of cryptocurrencies. So you can see we have already invented and are already using the next generation of currency. It's already there. This is no longer a theoretical thing. Plus, if you look at it in terms of attributes, it really beats a lot of the other alternatives that we've always had. And an interesting thing is what Bill Gates said. Bill Gates is famously quoted as having said that banking is necessary, banks are not. He said banks are dinosaurs. So there's that idea that you don't need the intermediary, anymore. Yeah. So it's an idea, by the way, that's been accepted so widely. And I don't have time to show this to you in this video, but I've got other videos that are ready for you that show you how well it's been accepted and how fast it's growing and so on, and much more. How widely, how it's already gone into the level of acceptability that is higher than most people think. Okay, cryptocurrencies are now in the space of the United Nations is using them. Various countries are using them. A lot of the top 500 companies are starting to form groups. Like, for example, the Ethereum Alliance, Enterprise Alliance. To take part of the blockchain. So it's something that is quite. It's getting a lot of movement. Now, let's talk about the greatest transfer of wealth in history and possibly the greatest opportunity of our generation. And the idea here is that fiat currencies and the old monetary systems are either going to gradually fade away, or rapidly fade away, or suddenly fade away. In one of those combinations, we can't tell the future, but it's going to happen. The fact is, most experts today, and I'm talking about experts, not conspiracy theories, financial experts, presidents, and so on already say this publicly. Okay. So it's a system that has already been disintegrating for a while. And by the way, if you look at the history of money, you'll realize that most fiat currencies around the world have an average lifespan of 30 years. 30 years, and then that's it. You have to get a new one. Inflation or something destroys it. So, and then if you look at global reserve currencies, they have a lifespan of about 80 years. So we are already at the end of the cycle for the current global reserve currency. It's not an exception. Like every other in its past, it will go through the same cycle. And so when that happens, there'll be a transfer of wealth. This value just doesn't evaporate; it goes somewhere. So it's going to transfer. People are going to look for new MOEs, UOAs, and SOVs. Means of exchange, unit of accounts, and store of value. And what they'll do is they'll transfer whatever they've got in fiat currency, and they'll move it into precious metals like gold, silver, palladium, and so on. But then how much can you carry of that stuff, right? So the bulk of it is very likely going to actually transfer into cryptocurrencies. Okay, that might be Bitcoin and Ethereum and so on, or it might be something else that we don't know about. But right now, the current contenders are those ones, right? And now here on this graph, you see how this is the total market capitalization of all cryptocurrencies, okay, including Bitcoin, Ethereum, and so on. As you can see, by the end of 2013, it was at like $0 billion, the value. And then, it's moved on to today, it's around $100 billion. Okay, and in the last few months alone, it's gained about $90 billion in the last few months. So people are already shifting value, okay, to cryptos. And then this is an interesting survey by PricewaterhouseCoopers, and only 6% are familiar or extremely familiar with cryptocurrencies. The bulk of the world doesn't even, some of them never even heard of them. Some of them have heard of the word Bitcoin, but they think it's funny money, it's a fad that's going to fade. Remember, I don't know if you're if you're around when the internet was just starting. I was, and people used to say stuff like, "Oh, that's just for kids," or that's just for the nerds. And now nobody even says that. Everybody uses it. Everybody, including everybody. So we're sort of in that stage with cryptocurrencies, right? And now finally we're able to come to the idea of the end of the money religion in quotes, like we talked about it, okay? And by the way, this is going to involve two things. It means people are going to individually and collectively as societies disengage from the drama of their subconscious wounds. And we'll talk about that in a sec. And also they'll disengage from the drama of monetary politics, the whole nanny state. We want jobs. We want you to fix things. We want our politicians to fix things. We want our politicians to create jobs for us. That nanny state kind of idea. This is a cycle of drama that is interconnected. As within, so without. That idea that we're sort of like, our monetary systems and our societies literally reflect what we are as individuals. So, but as we evolve and we start to learn more about ourselves, we become more self-aware, as a lot of people now are becoming aware. They're becoming aware because of, we've got the internet, we've got better communication, better networks. We're also open to read and study and learn and talk about things we never used to talk about before. So people are evolving and becoming self-aware, and that's also what is driving the monetary evolution. But it's a cycle, it's a vicious cycle. So you have to disengage from inner drama for the outer drama to sort of work. Now let's kind of like dive into those. Inner drama is the subconscious wounds. Let's see what those are. Carl Jung, if you've never heard of who Carl Jung is kind of like the father of modern psychology and psychoanalysis. Yeah. So this is the founding father. This person, Carl Jung and Sigmund Freud, are the two fathers of, or whatever founders you could say of modern psychology, psychoanalysis, whatever that word. So Carl Jung says, until you make the unconscious conscious, it will direct your life and you will call it fate. You see? as above, so below, as within, so without. So we cannot deny that our thoughts and emotions, influence our habits and what we create as a society, collectively and individually, and so on. And by the way, this can be thought of as our self-view, what we believe we are, and our worldview. Okay, so when we believe in certain lies, that's the reason why we stay stuck. Okay, once we start dropping these lies about self-view, worldview, what the world is, what we are, what human beings are, oh, they're our enemies versus they're our brothers and sisters. As long as you've got this idea that competition and like we are better than them and all that sort of stuff, all these separation ideas. So as long as that is there, then you create a separation-based society, and you have antagonism or whatever, and then you create opportunities for people to come and screw you because you're divided. Divided we fall, that kind of thing. United we stand. So as we evolved as a society from separation to unity to oneness, in whichever way you understand that, we're not talking about any one particular way, also our societies will change, also our banking systems and so on will change. Okay, so and by the way, also for those people who understand how the law of attraction works, because the law of attraction works based on the idea that the whole universe is an energetic environment. Everything is energetic. All the atoms and subatomic particles are all energetic, and there is that interplay between mind, body, and spirit, and this energetic thing. So we create our own reality through that interplay of mind, body, spirit with this energy that is the foundation of everything that life is. So a lot of people say, oh, I'm stuck and the law of attraction doesn't work for me. They're not understanding that it's not about sitting on your couch and visualizing a brand new Ferrari and then you're supposed to look outside the window and there's a fucking Ferrari outside. That's not the way it works. It's about the sum total of your self-concept, your world concept. All of it is creating reality. The whole sum total, not just what you wish for, okay, is the whole deal, okay? But anyways, moving on, sticking to the topic. The other part of that vicious cycle is disengaging from the drama of monetary politics. And here, in my opinion, we will go through 3 stages, in the near future to the distant future. Stage 1, right now, we already have cryptocurrencies and they're already growing in acceptance and usage and all that. Okay, so this is a stage where the monetary system finally gets off, let's say, like an elitist based system, and it becomes more like a decentralized, distributed, autonomous kind of multi-system kind of thing, rather than one banking system, the global banking system. You've got these tokens or cryptocurrencies that are sort of created within regions by people for their particular needs, so they don't have to actually get the permission from some kind of central authority to do it. Okay, and if you want to learn more about this, you can go to my website, which is www.newmoney.tools. And the way I recommend you to start getting into the game now, because you also want to take advantage of, you want to be in the game as people are shifting their value away from fiat into crypto, but you want to do it safely. So I recommend that you use the AA plus DCA plus R strategy, that just like asset allocation, dollar cost averaging plus rebalancing. And again, just go to www.newmoney.tools for that. The second stage, in my opinion, which will happen in the near future, when I say near future, I mean it could be 2 generations from now, 3 generations from now. I don't mean next week or next month or 10 years from now. It could be 1, 2, 3, 4, 5 generations from now. That's what I mean. We are actually going to let go of the whole idea of a monetary-based society. We're going to let go of this idea of debit and credit. Look at nature. Nature does trillions of transactions a second, between the bird and the flower and the bee and the flower and the pollen and the whatever and the water cycle and the energy. There's so many things, and the deer and the cow eating the grass. Everything there's no one keeping debit and credit. And so it's a hyper efficient system. It's much more faster than if you have to do this whole monetary debit credit thing and wait for some credit to amount, and then that gives you the permission to go do something, So we'll eventually drop out of that psychology once we again, as we move from separation to unity to oneness. And we'll adopt something called the resource-based economy, also known as sharing economies. And if you want to learn more about that, you can watch this really cool free documentary on YouTube. It's called The Choice is Ours. Fantastic documentary. The choice is ours. And another one is called Paradise or Oblivion. Paradise or Oblivion. But start with The choice is ours. Very good. Explains everything. That's one way of doing it. Okay. Now the next stage, distant future. Now that's many generations from now. I believe we're going to have energy-based living. So it's not even going to be resource-based or sharing. It's literally going to be like consciousness itself being the technology. Like we'll start having an alliance with matter, whereby we can literally um, on the lower scale, we'll probably live the way Nikola Tesla had it envisioned, whereby we literally start harnessing energy to do amazing things out of thin air, okay, with very tiny little devices, and no need to actually buy and sell them and all that sort of stuff. In ways that we can't even imagine today. I mean, there's no science fiction movie that probably approximate what's possible, so it's actually way beyond like most people's imagination. And then on the farther scale of that is where you literally have a consciousness aligning with matter, and then you don't even need devices anymore. But we're talking generations from now, and that's some very serious evolutionary leaps. It's not just technology. I'm talking about the human being itself evolving, So we're talking generations and generations from now. So I just thought I'd throw that in. But right now, stage one is actually here right now. And like we said, the way to get there is literally we have to break the cycle. It starts individually from within us. Okay, it's not like it will be rescued and brought to us by some external thing. Like we saw, politicians don't even understand how the current monetary system works. A lot of them don't get it, So it's literally about you and I. That's the point. Okay. So that's it. Thank you so much for your time. And for more information, tools, and training on how to actually execute some of these things, just go to www.newmoney.tools. Thank you very much and have a beautiful morning, day, or evening. Bye.